Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So this week I want to cover off world charts slipping, and I titled my client newsletter this week Sleepwalking, and it's literally that the U.S. markets are unaware of the pressures going on in a lot of the other markets, and so one of these things is going to give. Either the rest of the world is going to start to wake up and realize that everything's okay, or America's probably going to struggle if they're not exporting a whole bunch of stuff to the rest of the world because the rest of the world lacks the capacity for demand. So wanted to cover it off this week, and we'll see what you think of the charts, but that's the whole idea here, is not to tell you after the news slips out, but more to keep you updated as we go. So American indexes are in the top right-hand corner of the chart. That's bullish. European charts and parts of Asia look weak. So the real question is, can they turn? And then, will the recession in the rest of the world drag America down? And that's really what I want to talk about. So if you like the type of work we do, you're more than welcome to go over and take advantage of our 1-month trial offer for just $7. That is non-refundable. So if you apply for $7, you can go and check out everything we've ever done. All of our work is posted there. You can see the daily setups, our Osprey opportunities list, which we break things out by theme, and a lot of people find that quite helpful. So all of those things are available for you. Just go and check them out on the website. And again, for $7, is that really that hard? I think you'll enjoy what you see over there. So I want to start with the two big guns, the S&P 500 and the NASDAQ 100. And news today that the NASDAQ 100 is going to be rebalanced or, quote, limited. Not going to allow the 7 heavyweights to kind of get higher in that index and take up so much of the moves. So that'll be quite an interesting adjustment. Now, a couple of things that could happen here, right? It could be that, okay, so money starts to pull out of those large caps and goes into a whole bunch of the other companies if they know they're not going to get the lift by being part of the NASDAQ 100. And if that was the case, is that going to be pretty bullish? So I think that looks, pretty important to me. I think that'll be an interesting way to play this. So keep that in mind. Now, I do want to point out a couple of things on the indexes here. I think it would be okay to draw a trend line up here, and you can see we probably wouldn't have hit it yet, but we're getting to the point where we're getting, the market's just been sideways since the middle of June, really since the options expiration day. We pumped up on the last day of the month, and then we haven't done anything since. So we're still just kind of hanging sideways here for 3 or 4 weeks, and as we head into earnings, we'll see which way the market wants to flex. Now, one of the things I like to do is draw a trend line under my PPO, and currently this trend line is breaking on the S&P 500, and the same thing for the NASDAQ. This trend line is breaking. So that suggests to me that the momentum is waning, and the NASDAQ trend line goes all the way back to the October low. So that just tells me to be more careful. Now, you do have an uptrend line here on relative strength, and when the NASDAQ's outperforming the S&P 500, that's something I like to see. For the last 6 weeks here, it's basically performed in line with the S&P 500. So let's not say it was bad. I mean, the S&P 500, look at the trend here. It's been pretty strong. But if all of a sudden the NASDAQ starts to underperform, typically that's something worth watching. So let's keep that in mind as we go. We do have a lot more red days starting to show up on these indexes, and back in April it didn't seem to matter. We had lots of red days and we just ground sideways. So here we are now with all of these red days, and the real question is, do we start to break down at all? So if we were to count, the Investor's Business Daily has a methodology where you count what's called distribution days, and so each time you have a higher volume day on a down day, so on a red day, that's 1. So in this case, there's 1 here, 2, 3, 4, 5, 6, So we've had 6 distribution days. Typically 6 distribution days suggests a market could be ready to correct, and so you should be more careful. So we're kind of there. I think the bigger issue is on each one of these days, normally they like to see a move down of greater than 0.2%. A lot of these days we were just barely negative. So anyway, we're just not seeing kind of the buying appetite yet, but we are heading into the earnings period. So let's watch and see which way this goes. Now I want to continue and go to a weekly chart for the S&P 500, and as you can see, we're getting up here at 440. We were at 452 at the March highs in 2022, and this 440 level over here in September of 2021. So now the real question is, can we break through here? And we'll just watch and see if we can. Our all-time high was at 468.78 on the S&P ETF. And when we look at the NASDAQ QQQ sitting up here at 375, that's a real resistance layer here. This is 380 on the chart over here. 380 puts us right in here. Well, we would call the support level for the top. So as we bang our head on there, we'll see if we've got any more upside power. But again, I like to draw an upside trend line here and just make sure that's not breaking yet. And it's not. So we're still watching, but this isn't breaking yet. And then the way I would just draw this is when this starts to break, that could be a problem. You can see over here when this was breaking, it was a pretty good place to take money off the table. Over here when we started to get this breakdown, and you can either run it off the lows here up like this, or and I probably would have had it up here, so this dip in here would have caught me, but a line like that, or set it up a little bit flatter, not as aggressive, and maybe something like this, and then when this line broke over here, you started to see a 6-week correction. So it's something to watch for. And then you can see back in 2022 here, we corrected for a whole year. We had a brief uptrend, and that was nice. And when that uptrend ended, so did the relative strength. And so I like to use those as at least a clue that something might be changing. Last thing I like to look for is my PPO uptrend breaking. And, you know, I've been watching this, and it just continues to grind higher every month. The last 4 months here, or 4 weeks, we've been on a blue streak where we've had 4 blue candles in a row. We got that back in April, May, and obviously broke out to the upside. So still not very negative. We're just moving sideways, and the real question is, will we pop on earnings or will we drop on earnings? And obviously that's going to get underway on Friday with the start of the second quarter earnings season. So should be pretty interesting to see what the market wants to do there. And I'm recording this on Tuesday morning. Now, again, the important thing to remember, well, it doesn't like to save that, so we'll just cancel out of here and go back. So there are some good signs. I mean, there's things like ARK. Look at this. This is breaking out very close to 1-year highs or 10-month highs. That's pretty nice, and a real steady push here. So this is what we'd call a base, and to me that's pretty bullish when you have something as growth-oriented as the innovation ETF starting to break out. And we've also seen, you know, some of the EV names start to pick up. I think Rivian was a name that has popped recently, and we have NIO is another chart that's starting to look a little bit better, and there's also NIU, I think. It hasn't quite broken out, but it's sitting right around its 200-day moving average. So the real question is, some of these automobile technologies, are they going to start to take off? That would be obviously bullish. And then the next question we have is, you know, used car sales or used car prices are coming down because new car prices are coming down as they're starting to offer more discounts off list. So we're starting to see the car business change. When I look at Ford and I look at GM, you know, this Ford chart looks fine, nothing wrong with it. The only thing I would say is the PPO's rolled over here. Maybe it needs time to pause a little bit, nothing major. And GM is just sitting here sideways for the last week and a half, but it's up pretty much near the highs of every one of its rallies. So that gives me a little bit of pause. When we go to the big EV favorite, Tesla, this chart looks to me like I have a very nice wave 5 formation. So 1, 2, 3, 4, 5, and you've just tagged the top. Volume falling off considerably lately on the gap up here, so it doesn't seem like a lot of people are trying to buy it, and we have negative divergence. So what does that mean? We have a lower high in momentum, but we have a higher high in price. Want to keep our aware of that. And then the other thing I like to be aware of is when something that's been outperforming stops outperforming. So in pink here, or purple, what you'll see is when this starts to break, those are just good places on the chart. So first of all, let's do two things. Let's separate the relative strength chart from the scooter line. And so the scooter line looks pretty bullish, and I find it's not a very good timely indicator for exiting, but it does help to tell you when things are starting to run. And when I look at this, so if I just take a trend line and draw them on here, I think you'll agree that most of these are a pretty good place to get on board or off board Tesla, and even in here. So now we've had this nice little run, and we're starting to think about cracking this line. So the question is, do we turn and bounce up here, or are we starting to realize that there's a problem in the car business and this chart about to break down? So that's one of the questions we have. And then obviously we want to draw a trend line on here and just make sure that this chart keeps climbing. Now, even if it started to relax a little bit, would that be a problem? I don't think so. But it all depends on how much you want to let go. So we were at 284. This line comes in at around, let's call it 220 by the time the price gets down there. Do you want to watch a $60 pullback? And maybe you do, but that's roughly a 20% drop. So seems like a big drop if that's what was going to happen. So anyway, with that, I would be a little bit more careful on these car companies, as the big king here is starting to look a little less bullish in my opinion. And it's not going to let me save that again. Not sure why. So we'll just cancel out of here. Okay. So with that, I want to go over and I want to cover off these global indexes as I mentioned at the top of the show. And again, it doesn't do me any good if I show this to you after the U.S. market has decided to follow suit and break down. So it's better to at least have this data sitting there so that we're all aware of what's going on in the background. So with that, let's just quickly move on here. So this is the German monthly chart, and I don't really want to focus on monthly because we're mid-month. But what you can see here is we had a prior high. We're trying to break out to the upside, and it hasn't quite been able to. Currently, it looks like we're building a lower high in momentum. Don't want to get too far ahead of ourselves. If this chart started to turn up, that would be a little bit more bullish. So let's just say that Germany's still sitting at resistance. Well, when we go to the weekly chart, what we see here is the uptrend from October has broken. Remember how I was just trying to draw that trend line on the NASDAQ 100? Well, one of the things that we're seeing here is we're just moving below the 20-week moving average. And again, when you're in a bull market, it's nice to be above the 20-week moving average. And when you're in a bear market, it's a pretty good place to respect as a potential problem. So unless the German market starts to bounce real quick, and again, the close last week was the lowest close in 3 months, this chart's starting to roll down meaningfully. Now let's talk a little bit about my PPO. So here's the line at 2%. Let me just go get a horizontal. Actually, I'm having trouble getting those to save, so maybe I'll just put a horizontal line on my PPO at around 2%. And we'll just go with black. So what we want to see here is at 2%. Notice when the S&P 5 or when the PPO started to drop below that 2% level back a while ago. My good friend Vernon Strand helped me figure this out, so credit him with that great observation. When you start to see the indexes, when they're still charging up here around 6% and 4%, that's pretty strong. And I think the NASDAQ is, way up there. It's in a pretty strong place here. Let's go look at the QQQ. We're up around 6%. So it doesn't necessarily mean it's imminent that it's about to break down. Now, it might just go sideways for a while like it did in late 20 to 2021, but the chart was still moving upwards. So when you're up that strong, it's a pretty good place. But when you started to see the NASDAQ 100 drop below 2%, it was kind of a good clue that something was changing. Well, here we sit with the DAX. And again, when it dropped below 2% back here in September of 2021, there wasn't a whole bunch of profit left to be made. And then the PPO continued to drop. When it went below zero, that's when it really got weak. And then we got down here, we broke the long trend line on the PPO, we've rallied up, and now we're back to this 2% level. So at least it's a level to be aware of. Our full stochastic dropping below 50 is also a clue, and you can see all through that late 2021 rally, it was a great place to be on board. And then in here, the market started to chop, and the full stochastic had trouble really staying on the top half of the 50 line. Well, now we're just dipping below. So to me, it looks like Germany's a little bit more weak. Now, I'm not going to go into this level of detail on every chart and bore you with extremities. But what I would like to point out is on these charts, we've seen the relative strength break on most of them. And so what does the relative strength mean? It means each day, or in this case, each week, we compare the percentage move of whatever chart we're looking at compared to the S&P 500. I always post them in purple on my charts, the purple area chart. And the idea being, if you're outperforming the S&P 500, you're probably attracting money. And if you're underperforming the S&P 500, you're probably being sold off. And it's just a good cautionary tale when you start to underperform the S&P 500 that it might be time to step out of the way on that particular chart and find something else that's starting to outperform. So in this case, when the DAX started to break this downtrend here, wasn't really time to get on board yet, but at least it was a place to watch. And then when it did start to break out, in this case, moved to new one-year highs, that really kind of got the money flowing towards the chart. So again, it's not a recipe for instant success, but it's a good place to be aware of when you're outperforming and underperforming the S&P 500. And then on a weekly chart, typically the RSI will stay above 40 in a bull market and stay below 40 or below 60 in a bear market. So let's just keep watching that. And then whether or not you're above or below the 20-week moving average is usually a helpful clue. I talked about the PPO. Once you kind of fall below 2%, it's a good place to just at least be more aware. And sometimes it'll come down near zero and bounce, and then sometimes it just breaks right through like it did back here in January. And of course, when you're seeing the whole world break right through, it's probably a good place to pay attention. So full stochastic dropping below 50. So why do I have all of these indicators here? Hopefully I've just explained how I like to use them. And then with that, now we can proceed on to some of these other charts, and you can check them out. And we'll talk a little bit about them. But again, at least you have an idea of what I'm looking for on each one of these indicators. Okay, so the French market is still above 40, so we're still okay. But you can see a lot of underperformance. We're making new 3-month lows on the chart. And we're down near the bottom of the Bollinger Bands. And you can just see, typically you stay in the top half above the 20-week moving average. That's pretty bullish. We've been below the 20-week moving average for, majority of price action has been below for the last 6 or 7 weeks. But we did close last couple weeks ago above the 20-week and then shot down. So we're chopping here, but we're well below the 2% level now on the PPO. And the full stochastic is starting to bomb out. So this French market doesn't look any better to me. When I look at the Dutch market, and just for history's sake, I used to live in the Netherlands. And while I was there, it was just really interesting to kind of understand the different kind of relationships of all the countries in Europe as they work together or apart, whichever way it's going. And one of the things that for a small country, the stock market still had, really big companies within it. We had some big banks in there, and Philips obviously is one of the big ones. So anyway, it's a small country, but it's always still good to look at the relationship here. And typically they would have also listings from Belgium and from Luxembourg, so they'd call it the Benelux countries. But what I think is going on here, you can just see this chart really hasn't been able to break out. Now, it's hardly breaking down, it's going sideways, but the uptrend from October has failed. And again, October, that was when the S&P and the NASDAQ started to trend higher as well. So at least it's a good place to compare to, but all of these uptrends have broken, whereas the US markets have not. So we're just dipping below the 20-week moving average, PPO moving below 2%. Chart's not awful, but it's not great either. Looking at Sweden, and again, I like this chart a little bit because the Swedish chart, what I find is it's a small country. It tends to move before the rest of the market. And so they made their highs back in January, and it made a lower high here in May, June. It's below the 20-week moving average. And I've put a more gradual slope on this trend line. I used to have it on here, and obviously it broke through that, and it's just holding in here. But again, you're starting to see this PPO break down, so this chart doesn't look any better. If you look around Europe, you'll find whatever, and I'm just going to ballpark it, but Great Britain has roughly 60 million people, Germany roughly 60, France roughly 60, Spain roughly 60, and Italy roughly 60, and then you've got some smaller countries. So I have a group of these five larger countries in terms of population, and then I have Sweden and Amsterdam shown. We could get into every one of them, but I think it's more important to just kind of focus on what's going on. So here we have the big country of the United Kingdom, or 4 countries. And what you see here is this red line starting to dip back below. Not a great place. Broke the uptrend here from the October lows. And the close last month was the lowest, or last week, was the lowest close going all the way back to October of 2022. Now, that's a pretty big deal. So here we had a close. We had a dip below, but it wasn't the close. We closed the end of the week back up above it. But last week, we actually closed the London market below that level. Now, again, this is the 7-month trend line, or 8-month trend line. We're below both moving averages. We're below the trend line. We made lower closing lows. The full stochastic is all the way in the bottom, and the PPO is now below 0. That looks incredibly weak to me. So not really a great place on the chart. When we go into Spain, again, breaking the uptrend line, PPO starting to dip below that 2% level. Not a great thing. And we're below the 20-week moving average. So again, doesn't look great. Greece, I don't know what's going on there. Must be sunbathing is popular or something, but this chart continues to be up and to the right, and we see no reason to kind of, worry about Greece yet. It's way different than every other chart I've shown you here. Italy still sitting right near the prior highs, trying to break out to the upside. PPO is still above 2%, so it's holding, and the uptrend line is still intact. So again, Greece and Italy still look okay. The rest of them, not as much. Moving over into the Shanghai. Now, the one thing that I do want to point out on the Shanghai, this is the monthly chart. You just see this chart chopping around, hasn't done anything really for the last 10 years compared to what it had been doing. If we draw a trend line under here, roughly in 2018, the tariff tussle was when we started to see, I'll call it the long uptrend break, and we just haven't really seen a whole bunch of improvement since then. So we're watching quite closely. Now, when we get in on the weekly chart here, what you can see is this is 2022. Now, let me just go back to get the 2018 high. Might have to go 6 years. So you've got your 2018 high, and we fell down. We tried to, this was 35.87. So we tried to get through, and we briefly spent time with a couple of spires here, a little bit higher, and now they're dropping down. The only thing I'm looking for here is, can the PPO bounce around zero and start to take back off to the upside? We'd need some relative strength to start improving. So this purple area should start to turn up. We should start to get back above both moving averages, and we should start to see the PPO turn back up here. If we start to go below zero and below this trend line, I think we got much bigger problems, and we need to be aware of that. So this chart doesn't look very strong. Looking at the Hang Seng, this chart actually, if I go back to 2018, what you'll see is basically 2018 marked the high for the Hong Kong market. And again, that's the tariff tussle. And so what you see here is the chart's been making lower highs and lower lows for the most part. Had one high here in early 2021 that was higher, but since then it's been pretty ugly. So if this is a lower high, lower high, lower high, one higher high, and then lower high, lower high, lower high. Chart doesn't look very good yet, but we're hoping for some sort of a head and shoulders base here and start to get going. So that's one of the things I'm looking for, I'll call it, in terms of Asia. The Nikkei's been a great chart up in the top right-hand corner, but it started to recently underperform the S&P 500. So does that mean its uptrend is over? PPO rolling over at a high level. So maybe it's not going to fall, but maybe it just grinds sideways like it did for 2021 as it came off that really exuberant thrust. Looking in on the KOSPI, which is the Korean market, South Korea, you've got your 7-month trend line in play. You've got horizontal support and resistance trying to hold here. Your PPO momentum indicator's already broken, so I don't have a lot of reasons to like it, and we're sitting right on the 20-week moving average. So if that starts to break down, that's obviously going to impair, and we've got a PPO cross this week telling us that things aren't looking great. Moving down to Australia, down under or the land up top, depending on how you look at the map. And then going back to June, they made a low back here, and that trend line fits a little bit better, I think. But if you put a trend line here, obviously we would have broken it somewhere up in here. But we're below the 20-week moving average, the 40-week moving average, below the trend line. There's not a lot of good looks here. Now, this primarily sells a lot of commodities into Asia. So your PPO is going below zero. That's just not a great place to be on the chart. Russia is starting to roll over, and again, the war effort doesn't seem to be going so well for them anymore. And what you see here is the PPO starting to roll over below zero. That's quite a bearish signal, and if it was actually to start breaking down here, that's a bigger problem. So we have to keep that in mind. Toronto Stock Exchange, again, below both moving averages, but trying to hold in here. Can the PPO bounce and start to follow the U.S. market higher? Canada's roughly flat on the year. Mexico, whereas the U.S. is up almost 30%. So Mexico, you can see our big uptrend line broke here. Now we've kind of just been horizontal since the beginning of the year, no real power. PPO below 2%. So we're just not getting kind of the move we want to see here. And it probably didn't help that we took some oil offline last week. Brazil, one of the charts trying to break out above all of the 2022 highs, and it's just PPO starting to roll over. Is this momentum going to fail? And I would say it's probably going to start to, because you're starting to lose relative strength compared to the S&P 500. Okay, so that's a quick walk around the world. I think we've seen enough of the U.S. markets to know what those chart shapes are. Anyway, it's something to consider, and again, as we test those trend lines on the American charts, on the QQQ and the SPY, it's a good place to just keep your head up as we go forward here. Thanks for taking the time to join me on Market Buzz. You can also see the recordings on StockCharts TV YouTube page. Thanks, everybody. Have a good week. Bye-bye.